Do you know what a spinning top candlestick pattern looks like or how to interpret it? This pattern, often encountered in the world of trading, can provide valuable insight into market sentiment and potential trend reversals. Let's get started by understanding the anatomy of this pattern. A spinning top consists of a small body with upper and lower shadows that are roughly equal in length. The body of the candle represents the difference between the opening and closing prices for the trading session. When it comes to a spinning top, this body is small or even non-existent. The upper shadow is the vertical line above the body, extending from the top of the body to the high of the session, while the lower shadow is the vertical line below the body, extending from the bottom of the body to the low of the session. Moving on, we have bullish and bearish spinning tops. A bullish spinning top has a small body near the top of the trading range, suggesting that bulls were able to push the price up, but not significantly. Conversely, a bearish spinning top has a small body near the bottom of the trading range, indicating that bears were able to push the price down, but not by much. Interpreting a spinning top is crucial. The presence of a spinning top signifies a period of indecision in the market. It suggests that neither the bulls nor the bears have taken control, resulting in a standoff. The long upper and lower shadows indicate that price made substantial movements during the session, testing both higher and lower levels. Now, how does a spinning top reflect market sentiment? A spinning top often occurs after a strong price move, signaling a potential reversal or a period of consolidation. It indicates that market participants are uncertain about the next price direction. In an uptrend, a bearish spinning top can signal potential weakness, while in a downtrend, a bullish spinning top can indicate a potential reversal. However, confirmation from subsequent price action is necessary. For example, if a bearish spinning top appears in an uptrend and is followed by a strong bearish candle, it may suggest a reversal is more likely. Finally, let's talk about risk management. Traders often use stop-loss orders to manage their risk when trading based on candlestick patterns. Placing a stop-loss order just above the high for a bearish spinning top or just below the low for a bullish spinning top can help protect against adverse price movements. In summary, a spinning top candlestick pattern offers a visual representation of a market's indecision. It can signal potential reversals in price trends and serve as a crucial tool in a trader's arsenal. However, it's important to remember that it should be used in conjunction with other technical analysis tools and indicators for more reliable trading decisions. Adapt your trading strategy according to varying market conditions, and you will be well on your way to making informed trading decisions.